What's going on, guys? It's your boy Tyler, bringing you fundamental news on a fundamental basis. Today's article is brought to you by Reuters. Get ready for the debt ceiling rally. European shares look poised to rally after a wave of optimism that a US debt ceiling deal could be reached as soon as the weekend, which lifted stocks on Wall Street and in Asia. Investors keyed in on an agreement between President Joe Biden and top congressional Republican Kevin McCarthy to negotiate a deal directly, with Biden cutting short an Asian trip to return to talks on Sunday. Analysts highlighted both parties agreed to new, smaller teams to continue negotiations, which they took as a sign that discussions have moved to a more advanced stage. So, still work to do and still room for twists in this tale before the Treasury runs out of cash as soon as June 1st, which would trigger a disastrous first ever default. The air may be getting thin in some stock markets, particularly Japan's. The Nikkei came within 130 points of its highest since 1990, back in the days of the bubble economy, after smashing through 30,000 a day earlier for the first time in 20 months. The Nasdaq is on the cusp of a 13-month peak, and the DAX is hovering near its highest since January of last year. May is traditionally a month of selling. You know what they say, sell in May and go away. But the US default timeline is delaying the start of traders' summer vacations, so several analysts still predict a correction is coming, but maybe not until June. The European data cupboard is largely bare today, meaning the next macro focal point will be a smattering of US indicators, including the Philly Fed survey, jobless claims, and existing home sales. Some resilient data lately has suggested the Fed doesn't need to rush to cut rates, and the market has even priced in a 1 in 5 chance of a quarter point hike in June, from next to zero last week. In Asia, there was new evidence that China's post-COVID recovery is already past its peak, this time from Japan, where exports grew at the weakest pace in more than 2 years in April, as shipments to its neighbor slumped for its fifth straight month. Key developments that could influence markets on Thursday. Central bank speakers. The Bank of England chief economist Hugh Pill, Fed Governor Philip Jefferson, Fed Vice Chair for Supervision Michael Burr, and Dallas Fed Chief Lori Logan. There you have it, guys, for today's article about the debt ceiling. So what they're saying in this article is we could have a decision on the increase or decrease of the debt ceiling before the weekend. So what's going to happen is, if they decide to increase the debt ceiling, what that practically means is the dollar is going to go down if they increase the debt ceiling, because it basically means they're opening the door for more money to come into the system. So basically what people do when money is cheap is they go and borrow that cheap money and invest it into stocks, in high yielding stocks like your Nasdaq, your FTSE 100, your S&P 500. So guys, we're seeing Nasdaq at a point of resistance at 13,600, that level there. I'm not going to be specific as to 13,600 and what, but it's at the 600 mark. So what's going to happen is we're either going to have a retracement, or we're going to break that 3,000, that 600 level, if they announce that they're going to increase the debt ceiling. Then we might see that 13,600 level being broken. But as for now, the dollar is strong, gold is down, and the dollar is strong. Nasdaq is still up, but it looks like we're going to have a reversal, a retracement, but that formation hasn't formed just yet. We're looking in the next couple of days or so if it's going to give us a clear signal. There you have it, guys. May 18, 2023. It's your boy Tyler signing out.